Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering a stock market weekly recap for Monday, January 14th through the 18th, 2019. We're going to be covering the four main indexes, the emerging markets, stock futures. We had a lot of positive news. China probably going to buy some more U.S. debt. U.S. might drop some tariffs on China. President Trump's going to come out Saturday, do a speech about the government shutdown. We have some other news out there as well that's spinning out. So we got a lot of stuff going on. Futures are looking positive going into Monday. We're going to take a look at the S&P 500 over on FinViz, take a look at what stocks move positive, negative here on Friday, and then over the course of the week, take a look at financials, home builders, oil, dollar, silver, gold, bonds, and our mortgage rates currently. I think that's a new one we're going to be pushing in here. That way we can kind of keep track of mortgage rates week to week. Kind of going forward, we can see as rates kind of creep backwards, as they kind of creep forward. So that's what we're going to be covering in today's video. If you are brand new to the channel, hit that subscribe button below. I appreciate it. If you do enjoy the content, find it helpful, hit thumbs up. And if you have any comments, questions going over the video, stock market, personal finance, or real estate, drop it in the comment section, and let's go ahead and get into it. Okay, so the S&P 500, it started off negative here on Monday. I posted over my Facebook page, stock futures were negative. I posted my buys that I was selected. I made a video covering my 5 buys I was making on Monday and why I was doing it. I bought into my stocks. The stock market here gained, it recovered Monday morning. So I bought Monday morning, recovered Monday, Tuesday, Wednesday, Thursday, Friday, all positive as earnings came out, as possible talk of trade war de-escalation, maybe possibly removing some tariffs, maybe trying to bind up some U.S. debt, government shutdown ending. So there's a lot of positive news out there. S&P up year to date 6.54, 5-day change up right around 2.87%. Very nice movement there within the S&P. Dow Jones year to date up 5.91, basically followed the same as the S&P. Monday was a little bit negative, but as earnings started coming out with financials, Tuesday, Wednesday, Thursday, Friday all moved slightly higher. Now in the morning we did see after hours on a couple of the days during the week. I think I posted it. I know I was watching futures. Futures were red here. We can see here we sold off there Wednesday after hours, but it picked up through the day, and then there must have been some announcement right around there that spiked the Dow Jones up. Very nice. It kind of quickly came back, but then we ended positive, and then Friday we just rallied up, up 1.3% here on Friday, up nearly 3% for the 5-day change. Year to date up 5.91%. The NASDAQ here currently in second place. We're up 7.87% year to date. Again, same weekly chart. Monday, red day. Tuesday, Wednesday, Thursday, Friday, positive. Up 5-day, 2.66%. Now our winner currently, the Russell 2000, up 9.93% year to date. Now remember last year, 1 year ago, S&P 500, Dow Jones, everybody was hopping into the market because the markets were hot. The fear of missing out is right now. It's what's going on right now. People, investors, and individuals who were in the market who jumped out when the stock market was falling, they're jumping back in buckets. And right now the market's already up nearly 10% year to date from the beginning of the year, obviously. But just be careful, because remember what happened on February 1st, 2018, we started at 258. We closed Friday, I believe it was January 31st, or the Friday. We closed on a Friday, opened up on February 1st at 258, and then immediately afterwards, we took a dive. We went down. We lost nearly 10% here. It was about 10% correction there, and we had some rocky water there for a while. So jumping into the market right now, especially as we are as high as we are now, just be careful. This is why I don't invest it all in one chunk. I'm looking for that opportunity. I do believe we're going to see us move a little bit lower before we climb higher. If we climb higher, just depending on how earnings starts to roll out. Emerging markets up 0.48%, 5-day change up 2.01, year to date up 6.37. So here, stock futures are looking positive. I believe everyone's sort of anticipating Saturday's Trump talk. So President Trump's supposed to be coming out talking about the government shutdown. So currently, futures are positive, but that can all change Saturday, Sunday. So watch out for that. After hours here, we saw a lot of movement. The one that I had actually seen that was discussed on the Facebook groups was Tesla making a 13% move downward. So that's not actually shown on here. So some of the leaders and laggards, I'm actually surprised that Tesla did not make the list. Actually, really nothing here over 4% made this little bit of a list here. So some of those positive ones, we can see some financials kind of throwing in there. We see some tech and financials. So that's actually kind of positive there for Monday. So interesting. Now, taking a look at the S&P 500 here on Friday, lots of green out there, not a lot of sectors that are red. We can see Netflix continuing to kind of sell off after the earnings down 4% there. It's not too bad. We have Eli Lilly over there in healthcare. General Electric kind of getting pulled back, but that's not bad. A down 0.88 where they've kind of came off their lows of around $6, so that's actually not too bad. Now, taking a look here for the 1 week performance, any sectors out there that you can see kind of reddish or not extremely green? Telecom, so AT&T and Verizon, you can see they're not, over the course of this week where we saw Google, 4%, Facebook, 4.37, Amazon, 3.39, Apple, 2.98, Berkshire, 4.17, and the financials. Look at these financials. Bank of America up 12.56, JP Morgan up nearly 5, Wells Fargo at 4.47, Citibank 4.34. So if you take a look, earnings just came out, financials knocked it out of the park. Tech is coming up here pretty soon. I do have over on my website here, Financial Investor. We'll take a look at it really quick. I have added a brand new site there that was recommended. Qualcomm here down for the week, 3.88. But so a little bit of telecom communication companies, they got a little bit red. You can see a few utilities. Edison International, this is one I used to be invested in back in early 2018 as wildfires broke out in Cali. I said, no, I'm not going to hold on to this. Cali fires, they're going to be happening year after year, and it continued to happen. And I sold out at Edison International in the $70 range, 74, 75, somewhere in there. It's now at 54, so I'm glad I moved that out there. Lowe's, trading a little bit lower. Lowe's and Home Depot. Okay, so telecom and home improvement kind of slow there. Pfizer kind of moving slightly lower, but they were already up so high. So pretty good overall. Disney down 1.43. Disney came back off their lows. I remember seeing Disney at 104, 105. I was one and they kind of nabbed them. Financials, again, financials were a big win this week. They are the winner this week, I believe, as far as all sectors go. Here we can see the S&P, or the financial sector specific fund, XLF, up 6.14%. So up year to date 9.15%. They were the sore losers in 2018, so I'm happy for them. They're kind of coming off their lows. They may have a little bit of a pullback, but who knows? They may just continue kind of building themselves back up. They were already knocked down as pretty low. So home builders, this kind of plays a part with Home Depot and Lowe's. If you kind of move down here, we can see that their top holdings here, they should have some Home Depot. So here, Home Depot and Lowe's. We already saw they were negative for the week, so completely normal for this sort of home builder ETF to not be doing so hot. So down 0.31%. Oil this week up 3.76. Year to date up 17.08. Now oil as a whole sold off pretty hard these last few months here in December. So if we want to take a look at the news here for January, where we're currently at, you guys can go ahead and stop the video, read through what exactly happened here with oil. But as far as what happened globally, it didn't affect the markets. Oil has already been trading pretty low, and as a whole, up 3.76. Now the dollar stock market went higher this week. The dollar also went higher, so kind of interesting there. We started the week right around 95.67, ended here 96.36. So moving positive here in the week. Silver, as the stock market goes higher, silver and gold generally fall back a little bit. So silver down 1.84, now trading at 14.37, and gold down 0.64, now trading at 121.02. Year to date, silver is down 1.03, gold down 0.19. Bonds also moving down slower as, again, investors, they see that they're missing out. The fear of missing out is currently catching on with a lot of investors out there. And I see a lot of investors, I've seen a lot dump into the market. And that's good that they bought towards the lows. But now that the market sort of kind of came off they're at a high point right now. As far as they're trying to break through some resistance, they've actually kind of broken through the 2600 mark. 2640, I believe, was the resistance point. They did break above it. So we will see how the news kind of continues into next week. If the news that was floated out, if it was correct, if it was fake news, it'll all kind of take effect and either move us higher once it's been realized that it's true, or it'll take us lower as it was sort of pushed out there. So that was the bonds there. So prime rate is still that 5.5. Now mortgage rates, this is something new I kind of want to take a look at here. Current mortgage rates for January 2019. As of January 19, 2019, we can see that the national average annual percent rate is 4.590. Now this is for your personal mortgage loans, your conventional loans for your own personal property. Now if you're out there looking for investment properties, you're probably not going to nab anything under a 5%. So that is it right there. Not a whole lot more I wanted to cover. Oh, over on my website. So if you guys head over to the financial-investor, links will be in the comments section. If you head over to free resources, go down to investing tools, and then select that. Here towards the bottom, I have added some earnings. So where is it? Earnings Whisper. So free earnings calendar information, plus I have Yahoo earnings calendar in there as well. So you guys can click either of these, and these websites are actually really cool as far as, if you want to look at a stock that has earnings kind of coming up, you can check out the calendar here on the top left, and this is kind of give you, okay, so Goldman's Sandstorm Gold announced, but we can actually take a look at Monday, Tuesday, Wednesday, Thursday. So if we want to take a look at next Tuesday, we have Johnson & Johnson, we have ATI, not a stock I'm familiar with. What other stocks we have? Stanley Black & Decker. Their earnings per share is expected at $2.11. Their revenue at $3.6 billion. Meet or miss. You can kind of give it a surprise. So here we have their growth. A lot of information here. So very interesting website. If you guys want to check that out, that is over my website. This is a completely free one here, and you can kind of just move along and kind of take a look. Abbott Laboratories, Procter & Gamble. So there's a bunch of other links over on my website as well, so check those out as well. PE ratio, dividend information, stock screeners, that's FinViz that I use, and a bunch of other informational websites that I use, and that's all over on my free information tools. Now, over on Facebook, if you guys want to hang out just a few more minutes, I posted stock futures here on Monday. Monday, it's red. We were down over a percent. I was expecting Monday to open up negative and probably stay negative. There wasn't, anything. I see a couple of people were sad over it. I was happy. This is the best time to be buying, especially when we have a recovery like we did this week. So I made a video. I made my Monday buys. I went over why I purchased specific stocks. I was able to lower my unit cost on these 5 specific stocks. I increased my yield on cost. I increased my yield on cost. So for each of these stocks, I increased my future dividend payout. So it was a triple win, a win, win, and a win. So it was a happy Monday there. Had some good engagement there, and people reached, and I posted my trades right there. Best stocks going ex-dividend next week. Came with my article, wrote it out, posted it out. Lowe's, Clorox, CVS Health Corp, Williams-Sonoma, Lakeland Financial, all very good companies. I made an article, or a little post here, talking about AT&T. I found it was interesting. I shared this both on my own personal Facebook page and then here on the financial, and then I posted it over in the discussion here as I kind of share information out. If you were looking at, I had someone reach out and talk to me about investing. Sometimes it doesn't feel like investing $100 or $200 or $500 is really worth it, and so I thought I would create like a little example of what it could potentially mean towards your future if you start off with just a little bit of capital and continue to add to it week after week, month after month, year after year. It may start off as a small, it may feel like it's a small amount, but eventually that amount will begin to compound and roll into itself. And as long as you're not selling shares at a discount and those stocks are paying you out and you believe in them over the long term, you're going to be winning. So here I just had a difference here. If you invested $1,000 when AT&T was at $30.62, you'd make roughly $66.62. Now AT&T increases their dividend by 2% per year, plus that $66.62 we reinvested back into 2 more shares. So by your second year, without adding any more money into the stock market, those $66 would buy you some more shares, and your second year payout would be $71.05. So a difference there of nearly $5 without investing any new capital, and then with $10,000 and so on. I got paid out some dividends. I made nearly 20 bucks on January 16th. So WPC Carry, Essence Property, Digital Realty Trust, and Cardinal Health all paid me out $18.10, all there together. So dividends are awesome. I made a brand new app this week. If you guys want to check that out, I've been sharing it over on Facebook. I've been sharing it on a few different places. It's got a lot of engagement. I'm kind of happy with this app. I thought it was a lot of fun. It's a lot of fun to use it. So if you think the stock market's going to open up red, you ask it, hey, stock market going to open up red? You tap it or you shake your phone and it kind of spins the wheel and it gives you a prediction there. So fun app. It looks like it's had some good engagement there. Bye-bye trade war. Again, we were kind of talking about trade war possibly ended. China planning to buy $1 trillion of U.S. trade deficient. And then we have the stock market weekly change for the 14th through the 18th, 2019. Now, my numbers do show up a little bit different than what CNN shows. S&P 500 shows 2.83, Dow 2.92, NASDAQ 2.63. If you look at the CNN, 2.87, Dow Jones 2.96, NASDAQ 2.66. So that's a little bit different than mine, a slight number. I keep track of the S&P 500, Dow Jones, NASDAQ, Russell, emerging markets closing numbers every week, but I keep track of the indexes per CNN. So here, this week we closed at 2670.71, and last week we closed at 2596.26. That's a difference there of 2.83. To get this calculation, I take our first number, subtract from our previous number, divide that by our first number plus our second number, so current week plus last week, and divide that all by 2. And that gets me a difference there of 2.83. And I kind of double checked it here with this spreadsheet. This is sort of the percentage difference calculator. First number minus the second number divided by first number plus the second number divided by 2. So kind of weird calculation there. But if we took this number here and did this thing here and calculate it, 2.827, which just rounds up here to 2.83%, and that's just the difference there. That's the way I do my numbers week to week here. So first week I'm down 0.57 for the year. Second week I'm up 3.71. This week I'm up 2.62%. So right now I believe the Russell is the winner currently as far as week to week gains go. They're up 10.26%. So that is just the way I kind of track my information week to week and see how my portfolio changes each week. So if you guys aren't following me over on Instagram, definitely check me out over there. And that is all I want to kind of cover in today's video. If you guys did enjoy the video, remember again, hit that thumbs up, subscribe to the channel, and leave a comment. Thank you all for tuning in. I will see you next time. Have a great day. Bye.